maybe not up to speed with what they can legitimately claim. So it might be worth just...
Yeah, I mean, it's difficult to have a completely exhaustive list of allowable expenses, but all I will say is, if you think it is to do with your property, then it probably is. But there are all sorts of things. Well, I bought a lamp to light something, or what? I bought this. I did this. If it's to do with, you think it's to do with the property, it probably is, because it's more often than not we find people forget things.
Okay.
They bought something for a property and they forget about it, But a lot depends on whether your properties are furnished or unfurnished. Unfurnished, obviously, is a lot less. You can you can claim. Furnished is a lot more. But one thing a lot of people often don't think about is claiming some sort of mileage cost. I've had to drive from my home to B&Q, to Plum Centre, to the house, do the repairs, to the tip to take the damaged one away, back again, come home. That's all business expense. You had to do that to do the work. Now, obviously, if you've got AMRP managing your properties for you, you maybe aren't doing that, but if you're doing some of it yourself, you will be doing things like that. They're all legitimate expenses. So, if you think it's to do with your property, it probably is. If you're not sure, then ask somebody. One of the real challenges we always have in allowable expenses is whether an expense is what we call a revenue expense or a capital expense. And a revenue expense is something that's offsettable against your rental income. A capital expense is part of the cost of the building, and it's particularly challenging if you buy a property that's really run down and you have to spend a lot of money on it. Then that's a difficult area, because you've bought it cheap because it needed a lot of work doing to it, and you've then got to establish how much of the money you've spent on that property is what's called revenue and what's called capital. Some of it may well be capital because it's getting that property back into a habitable situation. You can't rent it out because it's damp, because it needs a rewire, it's not safe, because of whatever, then some of that could be classed as capital, and you've got it cheap because it's not in the right status. And some of it's revenue offset against your rental income. Obviously, I can't, in a meeting like this, go into specifics on that, but it's something that you've got to try and understand where that comes. But equally, if you've got some kitchen units in and they're falling apart and you need to replace the kitchen units, well, that's fine. You can replace the kitchen units. You need workable kitchen units. You can't operate without them. However, if you've got let's say three units and a sink, and all of a sudden you replace it with 12 units, then that might be classed as an improvement and therefore a capital expenditure on the property, because all of a sudden you've transferred a very small but functional kitchen into a much more elaborate kitchen, and you've just got to look at whether there's an improvement to that or whether it's just fixing something that was broke, essentially, is probably the best way to think about it.
Yeah. Am I right in thinking if it was an improvement, it would just be depreciated over a number of years instead of being
not necessarily. If it's to do with the structure of the building, it may well sit there as part of the value of the property until the day you sell it. Okay. One of your later questions there is about capital gains tax. I'll come on to capital gains tax in a second, but it may impact more on your capital gains tax calculation rather than your ongoing year-by-year personal tax calculation.
Okay.
So it just depends where it falls, and sometimes we have to make a judgment on that, and we have to present that to HMRC and see whether they agree it or they don't agree it. More often than not, they don't actually say they agree it; they just don't challenge it. So you get an agreement by default. But they don't actually come along and say, yeah, we're happy with that. It's just about making an assessment, having looked at the circumstances and make a judgment on how things work and whether we feel that's reasonable.
Yeah, certainly. I guess just to confirm, for example, letting agent fees, management fees are absolutely allowable.
Absolutely allowable. Any bills for the house being empty, such as council tax bills or electricity and gas and water while the house is empty. Your landlord's insurance is all allowable.
Yep.
Any general repairs and maintenance are allowable. But it's specifically anything to do with that property. If you've got to pay a cleaner to go in between the tenant lets, if you've got to decorate it between tenant lets, or those sort of things are all allowable. Your basic landlord repairs.
Because we've spoken to clients who wouldn't have been aware of those things. So even that, I think, is interesting. They certainly wouldn't. The mileage one's an interesting one.
Equally, I mentioned earlier about the mortgage situation. interest is allowable, but only at 20% if you're a higher rate taxpayer. One of the strange quirks about that is if you're just under the higher rate tax bracket, you could end up paying higher rate tax on your property income, even though you've got interest. It's just the way that the system works. But the interest is only, and it is only the interest. It's not your full mortgage repayment. If you're on a repayment mortgage, obviously if you're on an interest-only mortgage, that's fine. Usually we can get mortgage fees. If you've got an arrangement fee, can usually be covered. It just depends on the circumstances and what's gone on. But it's mainly your interest is deductible on that.
Okay. Yeah. No, that is useful, as I say. And I guess people will be missing out in this regard. You know, if they're not claiming allowable expenses, then they will potentially be missing out.
There is also another not particularly well-known claim. We have some clients who have properties that are generally the same person's been in for years. They don't have any landlords, agents letting fees because the same person's been in for years and years. So they've got really no costs. And HMRC do have this £1,000 level that if you have effectively, if your costs are less than £1,000, you can claim £1,000 as your costs. So, you know, if your rental income's £500 a month, you've got £6,000 a year and you've got literally no costs except maybe your property insurance and your certifications, which might be £200, you can actually just claim a flat rate £1,000 expense allowance on that. And some people just work with that and say, I'll just claim £1,000, that's it. That's all I've got. I've got nothing else this year. So
I suppose there's new costs that people know, like the selective licensing fee, which I believe is allowable. That's the license for the property. That can be a biggie. So, but I guess you're right. Actually, if you think it's to do with the property, it probably is okay. So, but people forget that there's quite a lot of expenses that.
Yeah, I think the only thing I'll add is HMRC have this phrase called wholly, exclusively, and necessarily for the business, and they can roll it out now and again. So, I don't know. Let's say you need to buy a drill for fixing something in your property. Well, yes, you've used it for your property. But are you going to use it personally? Well, you're not going to buy two drills, are you? You're not going to buy a personal one and one for your properties. So you probably are going to use it personally. So then is it allowable or not? And this is where it gets a little bit grey. Because obviously it's not wholly exclusively and necessarily for just for the business if you're going to use it personally. Equally, if a £40 drill would do the job, but you want an all sing and all dance and £200 drill with removable batteries and all that, then they're going to say, is that necessary to spend that much on a drill to go and, you know, put a banister back on a wall or something like that? Then, you know, so it's got to be reasonable, and they can challenge this. Is it exclusively for business purposes?
Yeah, got you. No, that makes sense.